All right, ladies and gentlemen, I want to welcome you guys to this evening's webinar. This is really just an impromptu thing I had. It was put on my spirit today to let's just do something where I can engage the marketplace a little bit. I'm a firm believer in giving value, as much value as you can, because what happens is that, you know, what your income is directly related to the amount of value that you give. Okay. And so if you guys understand that, then you would start giving more value, whether it's on the trading side or the building side or whatever it is that you do in life. Majority of the time, you have to give your clients or the people that that look to you, that are part of your service of your business, you have to give them some of that value so that they, you know, find you credible and want to connect with you even further. So guys, tonight what we're going to do is we're going to keep this very simple and very short. Well, I don't know how short, maybe about an hour and a half. I didn't want to lie, because it will take some time. Okay. And I do want to make sure that we open it up a little bit for, you know, questions and this and that. Oh, thank you. Like my cat? Yes, my cat. I've had my cat since 2003. So she's a little old, you know, but she's healthy. She does her thing and she don't bother nobody. If you don't bother her, she's, you know, she's cool. She's a cool cat. So we'll do that. And what I'm going to give you like maybe 4 steps tonight. Okay. 4 steps on reading the charts, just basic. Okay. 4 steps to help you start. And then what I want to do is after I give you these 4 steps on reading the charts, just naked, basic charts, what I want to do is I want you to the assignment will be for you to practice this over the next 24 hours. Okay. The next 24 hours, maybe 48, because I'm not sure if we'll be able to do this right tomorrow because there is an event here in Atlanta that we have to go to. If not tomorrow, then Wednesday we'll get back together. I just want all of you guys to just stay in touch. Okay. Maybe I'll put everybody maybe I'll create like a little Facebook group or something for just this group. Maybe I'll do that because otherwise I'm trying to, you know, communicate with everybody sporadically and that's not really useful. So, we'll meet again either tomorrow or Wednesday, and then we'll practice that stuff again and we'll move on to the next couple steps. Everybody understand what I'm saying, right? I'm going to give you bite size tonight. You're going to practice. What's everybody going to do? Say practice. Practice, okay? And then when we come back on tomorrow or Wednesday, then we will add on to that foundation, okay? That's the only way it's going to work. Otherwise, I'm just throwing a bunch of stuff at you and it's confusing you all again. And what we don't need to do is keep getting on webinars every day, all day to be confused all day, every day, right? That's what we don't have time to do, okay? Nobody has time for that. So what I'm going to do is I'm going to just pull up, hold on, I'm going to pull up my charts here. Let me find me a chart. And I'm going to share my screen. Hold on, guys. And then what I'm going to do is I'm going to kind of walk you through. Okay, hold on. Can you guys see that chart?
Yes.
Somebody unmute? Okay, let me know. Okay, great. So let me just even take some of this. All I really have on here is this and this, right? So I'm going to take these off even too, so that you guys can see that it really is just a naked chart, okay? Naked meaning there's nothing on it. There's no indicators. There's no nothing. And this is usually how a chart looks when you get to it, right? How a chart looks when you get to it. Does everybody understand this is just a basic chart, right? I'm just picking up here. This is GU. There's no pair in particular. There's just this one because this is the one that's up, okay? No rhyme or reason. It's just, it doesn't matter because the rules are going to pretty much still be the same. Okay. So step number 1, write this down, is choose a pair. Choose a pair. Okay. Ben, I'm going to ask for some participation tonight. Ben, unmute for a second.
Can you hear me?
Yes, sir. How are you, brother?
I'm doing pretty good. How about yourself?
Good. Okay, so Ben, what are you going to do? What's the first thing?
Would that be draw support in the resistance lines?
Ben, what did I just say? What's the first thing you going to do?
Oh no, I must have missed it. I apologize.
Got choose a pair.
Okay. Choose a pair. Okay, I see.
This is why we're gonna do this, because I know sometimes we're really thinking about this stuff, right? And I just want everybody to just keep it light and keep it simple. All right. Thanks, Ben. Got it.
Right.
Ty, unmute. Unmute, Ty, on your phone. Unmute. Can you do it? Can you make it? It's not happening? Okay, Amira, unmute.
Hello, hi.
Hi, darling. All right. What's the first thing you're going to do, Amira?
Choose a pair.
How many pairs?
One.
One. Everybody, a pair. This means if you are part of IML and you are a Swipe Trades customer, guess what you're going to do? You're going to focus on one pair. That means 40 different. Hold on, let me. That means if 40 different swipe trades come out, guess who's not going to be trying to take all 40 swipe trades? That would be you. Okay? That would be everybody here. Okay? So you're going to choose a pair. All right? In this case, it's GU. Okay? That's step number one. Step number two is you want to look for large candles on the daily chart. Let me click over to the daily chart. On the daily chart. Okay. Hold on, let me move some. Let me get all this stuff off of here. I'll redo it. It's not a big deal. Oops. No. Okay. Step number two is you need to be on the daily chart. Okay. And what you're going to do is you are going to look for large candles either coming from the top of the chart and or coming from the bottom of the chart. You guys understand what I'm saying? Anita, unmute.
Yes.
Okay, so what's step number two?
We're going to look for a large candle at the top or a large candle at the bottom.
On what time frame chart?
The daily chart.
Okay, very good. Now, guys, let me explain to you why we're going to look for stuff on the daily. Okay, we're going to look. The reason why we are going to look for our setups on the daily is because the higher the time frame, the more accurate the moves. Okay, that's why. We're going to mark up our charts on the daily. Okay. It doesn't mean we're going to sit there and watch the daily chart to enter a trade. It means we're going to mark the chart up on the daily. Okay. That way you can see the parameters of what's going on. Then when you really get ready to start trading, you're probably going to be down at the hour chart. Okay. So that you can see the candles moving more frequently and have an idea of how the price action is moving towards your support, resistance, towards your trend lines, things like that, that you've already drawn, okay? So that is very important. Some of you guys are trying to draw up your charts on the 15-minute chart, right? And you're missing moves. Why? Because you're zoomed in too close. You have to zoom out. Think of it like an airplane that's 30,000 feet above Atlanta. If it's 30,000 feet above Atlanta, i.e. the daily chart, you can see more of Atlanta, right? But if I came down to the top of my apartment building, I can only see what's below my apartment building, right? Which is just a very small circumference compared to the rest of the whole entire city, okay? Does that make sense? Does anybody not understand that concept of why we're even starting on the daily chart? Okay, now some of you guys might be more advanced. Some of you guys might be, you know, oh my goodness, why is she doing this? Because we have people who don't understand this stuff. Okay, so the goal isn't to help all the smart people keep being smart. The goal is to help the people that are trying to get it have an aha moment. Okay, aha moment. Any questions on this stuff so far?
Yes.
Oh, sure, go for it. Who's that?
Will Chapel.
Hey, Will.
How you doing? I emailed you the question that I had about the daily probably about 2 hours ago. My problem with the daily is, how do you tell a candle movement when you're in the day from the daily?
Well, you don't do it in the daily. You go down to the 1 hour, the 4 hour, 1 hour chart. You're only marking up the chart on the daily so that you can see, just like, please stop, so that you can see the overall direction and movement and patterns. When you're getting ready to get in the trade and it's the day, you can't do it on the daily. You have to go down to the hour or the 4 hour chart. Does that make sense, Will?
Yeah, but that one part I'm still confused about. Like, I can't get past that, because from the 1 hour and 4 hour, I understand you can see the candle movement. You can see if it's going to go up, if it's going to go down, what type of trend it is. But from the daily, it's not even a clock. You know, you don't know what's going on. Right now, I actually do see yours like either going red or green, like it's blinking back and forth, your line. But that's what I'm just lost, like that part right there.
Okay, listen to me, Will. Repeat after me. Repeat after me. The daily,
right? The daily
is only
for
markups.
For markup.
For us. Now, if you were Chase, right, or if you were Chris Terry, right, I don't know how much money you have. I'm not trying to count your bank, but if you had $40 million, maybe you would be trading off the daily. You understand? Yeah. But we're not trading off the daily. We're just using the daily to see where we are in the market. That's it. That's all we're doing with the daily. That's it. So now, if you want to see the candles moving, you need to come down, right? Because this movement right here on the daily, it's moving up and down, but it's very minuscule because you're too high in the airplane. Do you understand? You're so high up that a person walking on Peachtree, if you're up 30,000 feet, you can barely even see that person. Does that make sense?
Right, but there's some swipe trades that come out from the daily.
No, the swipe trades that come out from the daily are because they're marked up on the daily. Do you understand? They're marked up on the daily. And so when you have swipe trades that come out from someone like Swing Masters, they're marking up on the daily, and most times they're looking at the 4 hour chart. They might even show you the markup that it's a daily chart, or they might even say, hey, this is a daily trade, but what you still are looking to do is go down to your 4 hour and your 1 hour to identify your entry point and your movement. Well, I just need you to understand that. Like, don't make it more difficult than that, okay?
So I would just basically follow the trend. If it's kind of, look at the daily, if it's all moving up, that's what it is. We mark it up.
There you go. There you go. And once we get this going, you'll understand what I'm saying. There's nothing to do. Like I said, if you have $40 million, then what you're usually doing is you might be marking up on the monthly chart, right? You're marking up on the monthly and you're trading on the daily because your account could handle large swings up and down, all the way until you got to a certain support resistance or trend line. All right. But we don't have that. So we're going to start down. We're going to start at the daily, and then we're going to get in on 1 hour, maybe 15 minutes, because that helps us get more precision entry points. I need everybody to just understand it. Do not make this difficult. We're going to draw it up on the daily just so we have an idea of what's happening. Then we're going to move down the time frame. Everybody with me?
Yeah, so can I ask a quick question? Well, not really a question, just to make sure I'm following you correctly. Okay. So when you zoom in to see the candles, you're basically trying to see their where they open and close, and where they where the wicks are, to understand how many pips or where to get in.
Hold on, you're getting too deep into it. You're getting too deep into it, right? When we're going down, yes, we're looking for wicks and all this stuff, but we're looking more or less, we're looking for the price action. We just want to see.
Okay. Okay, gotcha.
Okay. All the details like wicks and pips, that depends. It depends on what you see as a setup, right? Okay. That's what I'm saying. Like, I can't, It depends. If you don't see a setup, then no, you're not looking for any pips because you're waiting until the market does something to give you a clue. Okay, now I'm looking to make some money. Until it gives you that clue, you're just waiting for it to give you the clue. And what I'm doing here today is I'm going to give you one piece of how we look for clues. It's like if we were going to play a mystery game, I got to give you the clues, right? I got to give you the clues of what to look for. If you don't know what to look for, you're guessing. You're guessing. And that's what everybody is doing. They're guessing 50-50 chance up or down. Right? And that's not this. This is not Vegas. It's very simple, but you have to know what to look for. It's like if you're driving in a car, right? You have to know what to look for. But when you first start driving, it may be a little difficult to get to the stop sign and realize that you can't just look for cars. You got to also make sure you're looking for people. Do you understand what I'm saying? Because if you stop at the stop sign and you're brand new and all you can focus on, I got to make sure no other cars are coming, your focus could be zoomed out, right? Your focus is zoomed out, which means if it's a person walking in front of you, you don't even see that person, right? And you could hit that person because you're looking for cars. What I'm saying is we've got to look for multiple things simultaneously, and we're going to trap the market to help us see that, okay? So this is just the starting point. I just want everybody to understand why we're starting with the daily. Because if I start with the 15-minute, I'm standing on the top of my apartment building. I can't see enough of the market. I can't, right? So now I'm going to be making decisions based on small periods in time, and that could turn against me if I don't know the overall dynamic of the market at this time. I only know this snapshot, and a snapshot is not going to help us. Not really. We need to see the full picture. Does that make sense? Okay. All right. So let's do this. So step one is you're going to pick a pair. Step two is you're going to go to the daily chart. And what we're going to look for are large candles coming from the bottom of the chart or large candles coming from the top of the chart. Why? Because on the daily chart, when you see big, long candles, that's the banks making moves. Okay, that's the banks making moves. If you're on the 15-minute chart, it could look like a big candle, but when you get to the 4-hour chart, it's a small candle. Does that make sense? Or if you're on it's a small candle, which means if you did that on the 15-minute chart, it could be a false move. Right? You could take it for something that it's not. It looks like something, but it's really not. So the best way is to do it on the daily because the daily is more accurate in reference to the moves of the players in the Forex game. Okay? So daily chart, we're going to look for large green candles coming from the bottom, and we're going to look for large red candles coming from the top. If large candles are coming from the bottom, like this one right here, let me zoom in. Y'all see this candle right here? See this green candle right here? Is that a large candle coming from the bottom? Right? It's a large candle coming from the bottom. All right? Let's see. Let's find another one. Right? Look, we're looking for a large green from the bottom or large red from the top. This is a large candle, but it's not from the top, is it? Right? Okay.
Because of the wick?
Huh?
Because of the wick? That's why it's not from
No,
the top?
because this is the middle. This is low and this is high. This is not the top of the chart.
Gotcha. Okay.
Visually, it's not the top of the chart, right? Obviously, there's price below and there's price above. So we're looking for top of the chart or bottom of the chart. Okay. So here we go. Here's a large candle from the top. You see that? From the top. Okay. Here's a large candle. Now it's relative, right? This is why you have to open up the chart, right? And you have to see what's going on. This is why we're doing this on the daily, right? Now let's say we were looking at this from here. Here's a large candle coming from this view. It's the bottom of the chart. You guys see that? It's the bottom of the chart because price keeps going up, 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 up from here. You guys see that? Okay. So so the idea is that you always want to start at where price is right now, because that's all that matters. Right now is where price is right now. So what is the first thing that we see? First thing we see coming back in time. First thing that we see coming back in time, looking left, is a large candle, a green candle coming up. Does everybody see that? We're not looking for small candles, large candles. Why are we looking for large candles? Because large candles indicate movement, like the bank is pushing price. Something is about to happen in that direction. And if you were in a boat, if you were in a raft, let's say a raft, and you had a big old cruise ship come past, right? You don't have a motor. You're in a raft, okay? And you had a big old cruise ship come past. Wouldn't it make sense to let the cruise ship go past and find a way to get your raft into the waves of the cruise ship so that you start to move? Doesn't that make sense? Or does it make sense for you to actually keep putting your arms in the raft doing like this while the water is standing still, right? Which one is easier for you to get movement? Like this while the water is still, or getting into the aftermath of the cruise ship in the waves? Which one do you guys think? Judy, unmute. Which one would you think makes more sense to do?
I'll be in the aftermath. I'll follow it.
Be in the aftermath, right? So this big candle is like a big cruise ship, right? We're little retail traders, right? You got $500 in your account, right? You got $100 in your account. You got $50 in your account. And it's a $5.5 trillion industry. You are a raft, okay? You are a raft. And it doesn't make any sense for you to try to trade when there's no movement. Do you understand? You're not going to get any pips because there's no movement. So when you see a big candle like this, here comes Royal Caribbean. They're plowing through, and now we're going to wait for certain things, okay? But step 2 is you get to this daily and you identify those candles, okay? So in this case, we have a large green candle coming from the bottom. So what am I going to do? At this point, I'm going to grab a line, a horizontal line, and I'm going to plop this line right there. Because if it's a large candle coming from the bottom, this is ideally what we call a demand zone. Demand. You guys know supply and demand, right? If there are a lot of houses for sale, or how about this? If there's not a lot of houses for sale, but there are a lot of people looking to buy houses, that means there's a lot of demand, right? There's a lot of demand for houses. And if there is a lot of people looking for houses and there's not a lot of houses, what do people who want to sell their houses have to do to the price of their house if they want all of these buyers to come look at their house?
Sale.
Huh?
Raise the price.
Raise the price?
Hold on. Ask the question again. I'm sorry. I probably didn't hear it clearly.
If we had 5 houses for sale in Atlanta, and we had 1,000 buyers, 5 houses are for sale, so the supply is low, and we had 1,000 buyers, which meant that the demand was high. There's a lot of people looking for it.
Right.
What is it that the sellers would have to do? Or what is it that the sellers would have to do in order to get the buyers to see their houses?
Lower price.
Lower price. You guys understand that? Think of it like this.
Yes.
Think of it like this. If you were going to buy, hold on, just like, stop.
My ball is under the couch.
Okay. If you were going to go and you were going to buy a Mercedes-Benz, right? And there was one Mercedes-Benz. There was one Mercedes-Benz. Actually, it's reversed. There was one Mercedes-Benz. And there were 10 people. It's actually the reverse. If there were 10 people that wanted that Mercedes-Benz, supply is low, demand is high, what would the seller of the bins probably do?
Take the highest bidder.
Take the highest bidder, right?
Highest bidder.
If you really want the Mercedes, that's right. So we're going to start at $50,000, right? Everybody wanted, okay, well, $55,000, right? You got to start weeding people out. In the demand zone, the price is going to get higher. Right? In the demand zone, the price is going to get higher. In the supply zone, the price is got to get lower. Right? So now we've got 20 Mercedes-Benzes. 20 Mercedes-Benzes. And now we've got one buyer. One buyer. What are all the Mercedes-Benz owners going to be doing?
Lowering the price.
Lowering the price until that buyer buys their Mercedes-Benz. Okay? So that's when you have, that would be a supply when the price is dropping, right? That's why at the top it's called a supply zone. And at the bottom is called a demand zone. When price is low, right? That's when everybody buys, right? If price is too high, your house sits on the market until the price starts coming down, boom, 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 boom. And then eventually you start getting offers. Okay? Everybody understand that?
Yes.
Does not understand supply demand. This is basic economics. It's not even about Forex. This, you got to understand supply demand.
Mm-hmm.
Hey, Tracy.
I agree.
Okay, yes, sir.
I just want to let you know you're doing a great job. This is really, I'm really getting to understand it. You're doing a great job.
All right. Well, who said that? Is that Calvin?
Yes, it is.
All right. Well, thank you. I really appreciate it. I'm trying because I want everybody to get it. You know what I'm saying?
Oh, yes.
Okay. So this is economics, guys. It's supply demand. You have to understand that. So if the price is not low enough, you don't have any buyers, right? But once price starts dropping, what happens right here? What caused that green candle, guys? What caused the green candle?
The demand.
Banks making a movement.
Demand, right.
They're buying now that price is what?
Going up.
While the price went down, it's going back up.
Correct. Would you want to buy? Would you want to buy a house at the top of the market or at the bottom of the market?
At the bottom of the market.
Exactly. So this is why this is demand. Now that price got in this area, there's demand for the Great British Pound. Do you guys understand that?
Yes.
There's demand. People want to buy the pound now. Up here, nobody wanted to buy the pound anymore. So what had to happen? They had to start
sell it.
off.
They have to sell.
Yes. Okay. So price is up here. Price is at 4.43853. That's too high. Nobody's buying. You guys see that? Nobody's buying your Benz at $2 million. Drop the price of the Benz. The Benz now gets to 80 grand, and it's a 5 series a 6 series. Okay. It's a Maybach, and it's new, and it's legit, and it's $80,000. If you were to bank, how many of those Benzes would you buy up? All of them.
All of them, yeah.
All of them. And so when that happens, it's a lot of movement. And on the daily chart, that big candle indicates a lot of movement. Okay. Now it's the reverse on the upside.
Going out because it was going down.
Okay, it's the reverse on the upside. So what I'm going to do is I'm going to put a little line right here just so everybody can see what I'm talking about. So here is, that candle is demand, right? Uh-oh, somebody needs to mute. We're trying to get this bag. Y'all having fun. That's cool, but we got to make sure everybody can hear. Now this candle right here, do you guys see this is a supply? You see that big long candle? You guys see it? Yes. Big red candle coming from the top of the chart. Supply. So basically when price got in this area, right, up to, I mean, you see this wick right here, right? It didn't go, come on, stop. You see this wick right here, price got up there, but what happened? It didn't last up there. It exhausted itself. Do you see that? And and once it got back down here, what happened? Everybody started selling off. Okay, supply, too much on hand. So let's sell it. Let's sell it. Sorry, please get down. No, don't sit down, no. Okay, right here. Now, even if you look at this one right here, right, this area, if you look at my crosshair at the top of the wick over here, it's not that far above from over here. Y'all see that? So my point is it tried to go up again, right? The buyers kept pushing price up, and it's like, nah, it's too high. It's too high. We got to sell it off.
So lower price.
So just that concept, do you guys understand what we're doing? Okay, so step one is you choose a pair. Step two is you get on the daily chart and you look for the large candles coming from the bottom, which is demand zone, and the large candles coming from the top, which is the supply zone. Hold on, what do we have? Okay, which is the supply zone. Okay, everybody with me? Is there anybody who does not understand this so far? Because we haven't even done nothing yet. All we're doing is just setting the chart up. Okay, perfect. So now that we have where the demand zone is, let me mark this over here. So I'm going to put a line. I'm going to put a line
at the supply.
At the top of my supply, right? I'm going to put a line at the bottom of my demand. So essentially, if we're looking just from November 2017 up till today, that's a pretty decent view. Do you guys understand that? It's not the last 4 hours. This is the last like 8 months. Okay, y'all see that? It's a big difference in the last 20 minutes. Okay, so now we have pretty much our resistance, right? We have our resistance. Price went up. It resisted the ceiling, right? So what did they do? They sold off the resistance, right? And then we have our support, all right? And it hit the bottom of the support and looks like it's getting ready to start bouncing its way back up again. Everybody see that? So here's the top, here's the bottom. And we want to at least mark those two off, okay? Now, another good way to help see that is if you just go over to your line chart. Okay, if you go to your line chart, it takes away all the noise, right? And the line chart will show you the same type of information, except it's only showing you where price closed at. There's no wicks. This does not take into consideration wicks. This takes into consideration the actual price. Price closed right here. That's it. That's all. Okay. So if you want accuracy with price, you come onto your line chart and you can kind of see that here. So now I can see how I got this marked, right? I've got the bottom and hold on. What is the problem? Come here, Josiah. Oh my God. The lollipop broke. Josiah. Okay. I can't help you right now with this. Okay. Here. You have to, I can't help you. Okay, so you have the top and you have the bottom. Now, if you scroll to the left, okay, here's something to keep in mind. You need at least, here's a note. Please write this down. Hold on, Josiah. Josiah, please go over there with that.
Go fix his lollipop, Tracy.
Hold on, guys. Okay, so the point that you have to make is that you need at least 2 points, right, to draw a line. You know, just like regularly, if you're going to draw a line, like if you were a kid and you were doing connected dots, right, you need 2 points to connect two dots. Like you can't draw a circle and you don't have at least 2 points that help to start to figure the circle out. You guys understand what I'm saying? So you need that same thing here. You need at least 2 points. So you can see we have 1 point here, and this is how you double check to see if this line even makes any sense. So does it make sense? Yes, look, it touched again right here. You see that? That's a second point. If I keep going, here's like a third point right here. You guys see that? So you only need 2 for it to be valid. Hold on.
Clear up. You want what? I'm doing something. Yeah, I'm doing something. Thank you.
Okay. So
please mute out, guys.
So we've got a couple of points here. So that's a valid line. Okay, great. So now we look at our top line. We've got 1 line here, right? Hold on, let me zoom in. Right, and it took us some time, right? We're all the way back to 2016, but you guys can see that here's another point here. You guys see that? So when you hear people say, look left, that's why you need to look left. That's one of the reasons why you need to look left, is to see that's even a valid point. Does that make sense? Okay, and you just go back until you see it. If you don't see it, you might need to adjust your line some, okay? But I'm confident with these, at least this resistance line and at least this support line, okay? And as you can see, price came up to this point. It did this, it exhausted, but after it hit this point, what did it do? Only thing it did was come back down to this point. Y'all see that? Okay, so that's what we're doing from that standpoint, okay? So I'm gonna come back to the candles and you can see this is where we are, okay? So now I'm going to remove these yellow lines. Well, I'll keep them there for just, now I'm going to remove them because you guys can see these, right? I need to move these yellow lines for a second.
Tracy, can I ask a question?
Sure.
You put those lines in there. When we're practicing, are we going back like, say, 6 months or how many months?
Just go to where price is right now. Go to any chart and go to them. You want to get used to identifying where, as close to where price is right now. I mean, you can back test it anytime you want, but I would say if you're going to go to USD JPY, start where price is now and go back and find where the large candles are right now. Most recent.
Okay. So you've got large red candles after that one you did up the top.
Yeah, but we're looking for that's the top of, after is not the top of the chart. Do you see? Okay. Any large candle after that is not the top of the chart. This is still the top of the chart.
No, but further over in April, between April and May, you've got a candle up there, up the top, on the right.
Yeah, but what did I say about that, Judy? What I said was that price tried to come up here, and once it exhausted itself, it still dropped off. And this candle is not a large red candle, is it?
Oh, okay.
Right. You're looking for the large candle that basically, like she said, shows that the banks are actually active at that time.
Correct.
Yeah,
now,
yeah. I was just looking at the top.
The key to this is not any candle coming from the top. That's not what we're doing. It's the large. That's why step number 2 is identify the large candles coming from the bottom, which is demand, and the large candles coming from the top. That indicates supply. When you have the large candles, that means the banks are in the game. Okay? Not any candle, not just because it's red, not just because it's higher, all that. No, large, 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 large. Okay? So now, next thing we're going to do, everybody got that? Step 1, step 2, we clear. Mm-hmm. Everybody can see large candles here.
Mm-hmm.
Okay. So now what we need to do, step 3, is we need to box it out, right? As Coach Orrin Wright says, if you guys watch Orrin, he says, yes, box it up like what? Chinese takeout, right? Mm-hmm. Box it up like Chinese takeout. What are we boxing up? We're boxing up the demand zone and the supply zone. It's not a supply price or a demand price. It's a zone. It's an area of price. It's not only 1.1777. It could be 100 pips of a zone. Do you guys understand that? So you have to know the zone where price could maneuver within the demand or maneuver within the supply. So it's a zone, all right? So the best way to draw that out is if you see this, like this big long candle right here, and then you see this little red candle in front of it, what candle pattern is this? What kind of candle is this?
As a swing.
Golfing.
Swing high?
No. A swing high is a movement. A candle pattern.
Candle.
Engulfing
candle.
An engulfing candle. What kind of engulfing candle?
Gosh, I forgot.
Is it bullish or bearish?
Bullish.
Well,
It's bullish.
Bullish.
Right? Bullish is the price is going up, right? Like a bull. You guys know a bull, when a bull charges, the bull goes up, right? When a bear gets ready to get going, the bear goes down. In real life. That's why it's bulls and bears. You guys understand that? So the bull is going up. Just the bull is like a rally up, right? The bull is a charge up. The bear, you think more submissive. The bear is coming down, right? The bull is going up. So this is a bullish engulfing candle, okay? Since this is a bullish engulfing candle, you look at the candle right before it, and what you essentially do is, I'm just going to put another little line right here, just for illustration purposes at this point, is you put a line right above the top of that candle, not the wick, the price, where price closed at. You guys see that? So I can make it bigger. You guys see that?
Yes.
It kind of adjusts because I adjusted the thing, but essentially it's from there to there, right? That's where we are. Same thing over here. What kind of candle is this?
Bearish.
Bearish what?
Engulfing candle.
Bearish engulfing. So what we're going to do, we're going to take this one and we're going to stick it right there. You guys see that? Okay. Now, what this really means when you have something like that is usually you're going to have consolidation prior to this type of bullish or bearish engulfing candle. Okay. You're going to have that consolidation there. And when you're looking at the daily chart, one candle could be consolidation, right? A whole day. And that's all the only place it went, right? So let's just see something. If we went down to the 4-hour chart,
Oh, I see it.
Okay, hold on. Let me go back even to this. Let me mark our candle so we can have a good reference point. Okay.
Yeah, because you can't see it up close, so you have to stand out. I can see it when you stand out. Oh, I got my mute on.
Okay, now we hear you. Okay, so if I come down, so look at this one candle on the 4-hour chart. So if you're analyzing this on the 4-hour chart, do you see how you don't even see that that's a bullish engulfing candle?
Right.
But right before that, is that not consolidation?
Yes.
Right? You guys see that?
Mm-hmm.
Does everybody see that?
Yes, ma'am.
Yes, ma'am.
Yes.
Okay.
Yes.
Does everyone know what consolidation is?
Oh, they right there in the middle.
When it stays, when the pattern stays the same and is going in one direction and not going up or down, it's going from right to left.
Yeah.
It's going south. It's basically bouncing up and down from top to bottom without really going up or down.
Right.
Side to side. So you're going to see consolidation. Then you're going to see what we call a breakout candle, right? This large candle that we're talking about is called a breakout candle. Right? So if you're watching IML TV and you hear somebody like Stevenson say, wait for the breakout candle, that's what he's talking about. He's talking about the big, large candle, right? The big, large candle, because you want to ride the wave of the big boat. Okay? You don't like, if you're looking at this right here, you don't want to be caught in this right here in a buy, do you? and the bank comes by and drops you down like that. Do you want to be in a buy right here? Right here. Do you want to be in a buy? It looks like price is going up, doesn't it?
Right.
So you get into a buy because price is going up. It's going up. It's going up. And then what happens?
It drops.
Drop. And then it drops. How many pips did this drop? One candle, 136 pips. You have over leveraged your account because you're trying to get rich on one trade, and now you just blew your account.
Yep. Now you gotta go back and get the job.
Which is not what we're trying to do. That's the opposite of what we're trying to do. Do y'all understand that? So this is why you have to wait. If this strategy is about waiting for the big candle. Okay? You're trading after the big candle.
And that lets you know what trend you're in, correct?
Not necessarily, but is letting you know that the movement is going that direction.
Okay.
Because the trend could change, right?
Yeah. True.
But you guys see what I'm saying? So we got consolidation here, and then we had a big breakout candle on the daily. So this one candle, you see the consolidation, right? Bounce up, bounce down all day, didn't do anything. And it wasn't until the breakout candle that things started to happen. Y'all see that? Okay. So if we would do this, I just like to make my stuff different colors so I can keep track of it. So green is demand, right? Hold on. So green for me is demand. So what I'm going to do is I'm going to come here and I'm going to get a box, right? And I'm going to put that right there. So I know this is now my demand zone. Y'all see that?
Yeah.
Okay. Then what am I going to do?
How did you create that box again? I mean,
sure. Over here on TradingView, it's like the fourth one down. Usually the default is like the brush.
Okay.
So come down to rectangle.
Rectangle. Okay.
And then when you click rectangle, then this will show up at the top.
Okay.
I move it over. And then you can change the colors how you want to. So I just keep mine green for demand and I keep mine red for supply.
Gotcha.
Okay. So now, all right. So now we've got a demand zone, right? Now, a cool thing to do is to just, if you double click on that, and you could just like add a number here, that'll extend it to the right. If you come over here and put a negative, that will extend it to the left, right? And so now it's all the way across. And you don't really have to worry about dragging it over and losing position, right? Just do that. Okay. So now I've got a demand zone all the way across my chart. Y'all see that?
Any MetaTrader 4 tips like that?
You can do it on, well, I don't really use MetaTrader 4 because I have a Mac. So it's more difficult on there.
I get more alerts from MetaTrader 4.
Okay, then whatever you need to do on your MT4, you know, they got tools on MT4 there. Because I have a Mac, I don't use MT4 on my computer. I just use it on my phone, which is still an Apple, and I'll still draw these things on my MT4. It's just a little bit more tedious, a little bit, right? Because it's on a phone, obviously. But you can still do the same thing there. All right, who's drawn on my screen? Come on now. Come on, who's drawn on the screen, y'all? Please take that off. Somebody got.
Probably don't know, Tracy. There's a setting for you to do remove drawings. They probably don't know. They're touching their screen and it shows up.
Well, I don't want to remove all. I just want to remove that one.
I know. Yeah, it's just not in TradingView, but on Zoom. In Zoom, you can remove it.
Oh, okay. So let's see. Annotate, maybe.
I can't remember what the name of it on the menu.
Undo.
Yeah.
Or clear.
It might be clear.
Clear all drawings. Thank you. Okay. Hallelujah. Sheila.
Wow.
Ooh. I hate that. Y'all, please don't draw on my screen. Please. Okay. So, all right. So now we've got demand zone. So now guess what we're going to do? We're going to come do the same thing for supply zone. Y'all with me? So I'm going to grab my box, but I'm going to turn my box red this time. And now I'm going to come here and I'm going to draw my supply zone. Y'all see that? Okay, so I'm gonna double click, and I'm just gonna put a 1 at the end of the top bar, and I'm gonna go negative at the bottom, hit OK, done. So now you guys can see we clearly have a demand zone and a supply zone. You guys see that?
Yes.
Okay. If you would just do this at least, okay, where you're just boxing out your zones, you will start to get a feel for where the top of the market has been and where the bottom of the market has been. That's what you need to know. Okay. Now, the other key is once you've got your demand and your supply zones, then you can go in and you can still identify additional demand and supply zones within the major supply and demand zone, right? So inside of this area, there are other points at which price was sold off, right? Or price went up. Do y'all see what I'm saying? So let's look right here. Do you see this big, large candle right here? This green one, right? So that could be an additional demand zone. It's not at the bottom of your chart, which means that if you're looking at this, you know you're not going to go that high, because as soon as price gets to your supply zone, what happens in supply zone?
Right.
It sells. So if you're getting into a trade right here as a buy, and you don't know this is a supply zone, and you go to sleep, do you guys understand what I'm saying? Now you're losing the trade that you were winning.
Right.
Why? Because you don't know, you don't have your chart marked up.
Gotcha.
Something as simple as that is taking traders out the game. You guys see that?
Yeah.
They're guessing. They were in it. Okay, great. But they don't know this is a supply zone. So they didn't know that once they got into this zone, you probably need to close out your trade and wait now. They just stay in, and they stay in and stay in and stay in. And now guess what happens? They got in down here. Now they all the way back down. And now if they go down to the bottom of this wick, they negative.
Okay, so are you saying that, I mean, once we do this chart on the daily, that we can break it down to seeing the advantages of like 4 hour, 1 hour, 30 minutes, 15 minutes, and on down the line?
Yeah, you can do that. But before we get off this daily, we're going to make a few more marks though.
Okay.
Okay. So what we've got our top. What's wrong now? Monty didn't. Leave Monty alone, Josiah. Josiah, Monty, get you a napkin and get that lollipop. Get out of that room on that carpet with that lollipop, please. Okay? Stop the nonsense. Leave.
I mean, well, I want me a lollipop.
Lord have mercy. Calvin. Me too. Okay.
Okay.
Okay. So, what are you doing to Monty?
Monty just got hair everywhere on me.
No, because you're rubbing her and you have sticky fingers. Isn't that right? Okay, that is right. Leave Monty alone. She doesn't want lollipop on her.
I know it. She said the same thing earlier today. I rubbed her and had lollipop on my fingers too.
Okay. So now, guys, if we look at the top, right, we got our supply zone, and we start working our way down, do we see any other areas where there could be supply and demand?
Where the big candles are.
Well, that's a good way to start telling, right? So here's the thing. Remember, you need to have at least 2 points. So a good way, again, is if you come to your line chart, right? So now you can see. So like, let's say right here at this point, right? At this point touches it, right? And over here kind of overshadows it. I mean, kind of oversells it a little bit here, but that might be, hold on, let me get my line. That would probably be a good area for
because you can also see the demand as well as the supply.
Well, not really demand and supply. This is, at this point, we're looking at support and resistance. We're not looking at demand. Demand is down here. Supply is up here. We're looking for supply. We're looking for support and resistance. Okay.
Okay.
So now if I come back and I look, can't you guys see right here? Price fought to stay above, right? Or to stay below. Well, it went up. Then here, what did it do? It stayed down. It bounced off this line, came back down. Now this way it went up, right? But then when it came back down, it still had a hard, y'all see that?
Yeah.
Yeah.
Y'all see this one line, the price keeps hitting that line one way or the other. It's hitting this line. Okay. So it's support. It's support when the price is on the top. Get down. And it's resistance when the price is at the bottom, right? It's the ceiling when the price is at the bottom. It's the floor when the price is at the top.
Mm-hmm.
Okay. So that would be, for me, right? That would be an area that I would look at, right? I would keep an eye on moving forward. Okay. This is another area that I see, right? See this right here? And if I keep looking across, y'all see that?
Yeah.
Right? Price comes down, it bounces off. It comes down, it comes through, but then it bounces off. It bounces off. It bounces off. It comes up. See all those wicks hitting it?
Mm-hmm.
See the wicks hitting it? Even right here, what happened? It hit it like 4 times and dropped.
Yeah, trying to break through.
Y'all see that?
Mm-hmm.
Okay.
So does that go through with, it needs to touch at least 2 times or more before you know which direction it's going?
Well, we're not looking at direction right now, guys. We're not looking at a trend. We're looking at support and resistance.
Okay.
Okay. Everybody you gotta stick with me. Everybody has all these concepts. You got the stuff in your head, but you're mixing all the stuff, right? And when you go to trade, it's mush. Okay.
Okay, so I see what you're doing. You're making sure you focus on each step at a time.
Yes.
Okay.
I'm not randomly getting in the trade.
Right. So you're following your a certain pattern step by step, so you can make sure you grasp the concept before you enter the trade.
Correct. I don't care nothing about what GU was doing right at this second until I draw my chart up.
Gotcha.
So what's the problem with people with swipe trades? The problem with people with swipe trades is that they're not in IML, they're not on IML TV either. They're just taking swipe trades. So when a swipe trade comes out, people don't know where they are in the market.
Right. Mm-hmm.
Now, are these professionals or people that Chris Terry has vetted? Yeah. But are they human too? Yes. And you're supposed to be here to learn this. You're not supposed to be here to ride their backs. Swipe trades is an assistance tool. An assistance to do what? Help you make trades even though you don't know how to do this yet. But if you've been in IML longer than 7 days, you should be practicing this regardless. Because now what happens if I get a swipe trade and it comes through, what do? I immediately come to my chart and I try to see what that swipe trades master must see in terms of his entry price, his stop loss, and his take profit. You guys understand that? If I don't see that,
who just did that?
If I don't see that, I don't get in the trade. That's me. That's my personal rule. You guys understand that? If I don't see what that trader sees, I don't get in the trade. Why? Because it's my money. And if I don't know how my money is getting ready to move, why would I just throw it out there being disrespectful?
Let me ask you this, Tracy. Is there a certain time when swipe trades come out?
No.
Is there a certain time limit in order to enter into that trade?
Yeah, you need to look at your chart.
So this is more like your confirmation checklist, your step-by-step confirmation checklist before you enter your trade.
Correct. The time frame is this. Calvin, if you're looking at the trade and it's already hit the entry point, you need not get in the trade.
Okay.
But how long that takes to happen, I don't know, because it depends on the person setting out the swipe trade.
Right. Okay.
You see what I'm saying? It depends on how far in advance they're trying to set it up. I don't know. But
Right.
if you already hit the entry point, don't go chasing money.
Okay. I got you.
That's when people get into trouble. Trying to chase it, right? And now it's flipping and moving all on you. You don't know what direction to go. And then, oh my God, swipe trades don't work. No. Okay. So yeah, I'm just setting it up. And I do this with the pairs that I'm interested in. This is why I'm saying choose a pair. Do you guys understand? It's not a lot of work, but until you get in the habit of doing this, it takes time. And if you're trying to be all over the market and be super trader and trade every single pair, every single swipe, you in Stevenson's Telegram group, you in Luke Telegram group, you in Orange Telegram group, and you just trying to take every trade ever known to man that comes out, you're going to be irritated, aggravated, overwhelmed, and you're going to cancel. It's not because it's hard. It's because you're doing too much too fast. Does that make sense?
Yeah.
So you need to pick a pair. It doesn't matter to me what pair you pick, because you should be going through this process with any pair you pick. Now, the cool thing is, once I draw this up, especially like on TradingView, right? Once I draw this up, I don't have to keep drawing this up. So tomorrow, when I get out of TradingView and I get on here tomorrow, guess what? This is already drawn up. All I got to do now is see where price is in relation to what I've already drawn up.
Because you can see it on a daily, and well, actually it's more like monthly. So
this is daily. It doesn't matter what time frame you're looking at it on. The point that I'm trying to make is that you do the work once and you don't have to keep doing it again. That's what I'm saying. You don't have to keep coming to GU every day doing this. So that's why it's worth your time to do it at least once. At least once. If you want to trade GJ, you need to do it for GJ. If you want to trade gold, then you need to do it for gold. Stop taking these signals and you don't know what's going on. That's not their fault. That's our fault, because IML TV teaches this. And so does IML Academy. You guys understand that? It's not their fault.
How long does this last?
How long does what last, sir?
This support and resistance, the way you have it marked up. Like if 5 days go past, then can I still use my indicator, like the way you got it?
Well, right here you've got from November all the way through now. I mean, how long did this support last? This resistance last here?
Okay, I got you.
it lasted for 4 months. Well, 3 months actually.
Right. So I can't say that. It just depends. Here's what you got to know. The market reacts and repeats itself.
Mm-hmm.
Okay. So if this is an area of resistance, it's an area of resistance.
I got you.
Okay. So this is why we're marking it up, because down the road by December, price could hit
pattern is going to show
still
up.
going to be resistance.
Mm-hmm.
Right? So you just need to understand where in the pattern it is, but this is always going to be resistance. Why? Because the whole point is, if I go back,
it's going to retrace.
Yeah, I mean, it's this. Oh goodness, hold on.
It's going to repeat itself somewhere down the line.
Correct.
It's a pattern you're looking for, and how that's what Oren said, that these patterns repeat itself.
Correct.
You just have to know when to
way back here. We're way back here. What's this? 2016. Do you see? This is
that's the same pattern right there. And then it's like that for 3 months again.
Do y'all see this?
The same time zone between March and May. It's the same pattern that was in the past, and it came back again.
Look, this is still support. You see that, Bobby?
Mm-hmm.
It's still support. This is June 2016. It's not about days. It's just, that's what it is.
That's
what it is.
Right.
And whenever price gets around that point, to start looking for some type of reaction. Right? In this case, this is a price reversal area. Right? It's like every time it comes here, it reverses. right? It was going down. What did it do? Turn around. Boom. Went back up. It went down. What did it do? Boom. Went back up. Came back down. What did it do? Go back up. Came back down. What did it do? Go back up. All this came back down. Every time it hits here, it's reversing. You see that? So if you know that it's doing that and you saw this big long candle coming down, you might need to wait before you get in a sale. Do you understand?
Mm-hmm.
Because if you don't have this drawn up, you're getting ready to get caught up in the amateur trader's mistake. You're chasing the big candle versus following the big candle.
Mm.
Look at that big long one right there.
Right.
Wow. Yeah.
Right. Mm-hmm. So you're chasing. Don't chase it. Wait till it does what it's gonna do. Okay. And then you get in. But these support and resistance areas are support and resistance areas. That's what they are. That's why you're drawing it, so you can see how price reacts to this area throughout time.
So let me ask this, because it, you know, from I'm thinking I'm picking up something. So with each pair that you use, not to say that you're going to choose a lot of pairs, but let's say if I go into a pair Euro US dollar, they have a certain pattern too. You just have to figure out the pattern, go back and see. So each pair has its own pattern and when to get into the trade.
Well, each pair has its own characteristic. Yeah.
Yeah, that's basically what I'm saying.
I mean, the market is going to move the same across all pairs, just not at the same time. It's not the same.
Right. I got that.
Yeah, so you never know, you don't know where in the pattern that particular pair is at until you start drawing it up.
Right. Okay. Oh, I get it.
You understand?
Yeah, that really helped a lot, because I always figured there was a pattern. But now I understand the point in having and drawing up your chart so you can keep up with the pattern. Correct.
This is why you will see almost every IML TV educator mark up their chart. Now, advanced IML TV people don't mark it up because they can see it. Do you guys understand?
Yes.
They can see it already. And this is why, if you're new, you need not be on some of the advanced IML TV educators sessions, because they're not giving you all the training wheels for your eyes yet.
Right.
These are
so that's why you have to create your confirmation checklist to know how to find the patterns and keep up with the patterns.
Right. This isn't really confirmations, because confirmations is like, okay, is it hitting support resistance? Yes. Is it at a trend line? Yes. Is it at a price reversal area? Those are like your 4 confirmations. You guys understand what I'm saying? Mm-hmm. But these aren't confirmations. We're not in a trade yet. We're not confirming anything. All we're doing is marking up the chart.
Right.
You guys understand? All we're doing, we are not in a trade. We're just marking up the chart. Please get down, baby, before you fall. Do you guys understand what I'm saying?
I got you. I mean, when I say confirmation checklist, it's just basically confirming how the pattern is flowing.
Yeah, it's just all you're doing is looking for support, resistance, and things of that sort.
Mm-hmm.
You see what I'm saying?
Yes.
So now, why am I looking for that now? I'm looking for that now because I'm not getting ready to trade on the daily chart. I'm getting ready to go down to the hourly chart, and I'm getting ready to start seeing, is there opportunity for a trade? Where is an opportunity for a trade?
Mm-hmm.
Okay, but if I don't mark it up first, I don't know where the opportunity for the trade is. Every candle could look like an opportunity for a trade.
Right. Yes, and your support and resistance is going to tell you where your opportunity is.
Correct. Why? Because generally, right, what do? We sell off the resistance and we buy off the support. You guys see that?
Mm-hmm.
Most times when we're buying, right, we buy off the support. We're buying, it went up. Here we bought, it went up. Here we bought, it went up. Here we bought, it went up. Uh-oh. Now we're in a supply zone. So now we're going to start going down. Okay, so now we go down. Now we broke through. Down, right? Resistance, resistance, went down. Now we broke up a little bit, right? But this was still a resistance point. We came down. Do you guys see?
Mm-hmm.
So overall, this is a little area right here. I mean, if we wanted to look at it like, stop, Josiah, leave my phone alone. Goodbye. Goodbye. If you really wanted to kind of look at it, this is kind of a stretch, right? But just use your eye for a second.
Mm-hmm.
This is sideways overall.
Mm-hmm.
You guys said everything before that, the market was moving up. And everything after that, the market moved down. But during this, it really just bounced around in that box. It doesn't mean that these weren't areas for trading opportunities. It just means on a holistic view, that area was more side to side versus selling off here or uploading, buying here.
Mm.
Okay?
Mm-hmm. I see it.
Okay.
Girl, I'm telling you, you did the darn thing. This is great.
Okay. So now everybody see that. Come on, Pumpkin, what you doing? Come on. It's like, come on. Baby. You need to be in your class right now. You doing all this.
My foot.
Get your foot out there.
My shoe.
Oh my God. Okay. All right. So now we've got this right now. Another thing that you could do, so we've got support resistance. Y'all see that, right?
Mm-hmm.
We could draw trend lines too now.
Mm-hmm.
Okay, because now you're talking about all the direction. Well, the direction is based on the trend. Now, obviously, we can see this is going down. You should be able to see that, right?
Mm-hmm.
You should be able to see this is overall consolidation,
Mm-hmm.
right? You should be able to see that overall this was up. Okay,
Mm-hmm.
but now we want to know where our trend line areas really are. Okay, so you come over here, you grab the ray.
And you look for is it the 3 points or the 2 points?
You need at least 2 points. It's 1, 2, go straight through.
Okay.
Right.
But that's why you grab a ray, because if you grab a ray, right? So I'm starting at point 1 already, right?
Mm-hmm.
And I'm gonna drag this. I'm gonna go until I hit the first point. Boom.
Right there.
I'm done. You see that? I'm done.
Mm-hmm.
Okay? That's that. Over.
And then you just wait.
You just, hallelujah! Now you're with me.
Right. Now you just wait for it to break through.
Now we're waiting. But if you don't draw this up, you don't even know what you're doing.
Mm.
Do you guys see this right here?
Yes.
Jay, come on. You gotta stop. Please, let's sit down. Get your shoes. Here. Take Paw Patrol and go over there, please.
Hey, that's not right. I just needed your phone for a little bit.
Here, Josiah.
Thank you, Mom.
Okay. So now we can see. So now I'm not even really concerned about all of that over there at this point. Why? Because this is, I mean, we're talking about from April all the way till now, we've been in a downtrend. Right? I only cared about this to help me draw support resistance. Right? And to help me find supply zone, demand zone. But now the market in real life is over here. So now I can focus on this area with all of my back data. Okay? So now that we've got that done, guys, I want you to just practice that. I want you tonight to just practice that.
Without even trying to get in.
Don't get in what?
Right.
Don't get
just drawing up your chart. You're still drawing up your chart.
Just draw up the chart.
Gotcha.
Draw up the chart.
Mm-hmm.
And then if you want to practice it over and over, go to another pair. There's tons of pairs. Go to another pair. Draw up the chart. Go to another pair. Draw up the chart. Can y'all do that?
Yes.
If you don't do this, I'm telling you, you're shooting yourself in the foot. I'm telling you, you're wasting your time and your precious money.
Okay, so now can we pick another pair and you do the same thing, but just go through it real quick?
Sure. What pair you want me to pick?
Doesn't matter.
Do a pair with the Japanese yen. The USD Japanese yen.
Okay, so let's do USD JPY.
Yes. Okay.
Wow, you already got to draw it up.
I already kind of got some stuff going on here. So I'll just erase everything. Okay. I'll erase my chart and we'll do it again, right? Because I know what we're doing, right? It shouldn't matter.
What's the surplus you had on your chart?
Huh?
What's the surplus you had on your chart?
Those are potential entry points.
Okay.
Those are potential entry points. Okay. So now we're looking. Step one, pick our chart, right? Step two, go to the daily. What are we going to look for, guys?
Large candles.
Large candles.
Okay, so coming from the bottom
and the bottom.
Correct.
Coming up and going down.
Got it. So starting from where price is, going left, if we're at the bottom of the chart, do we see any large candles?
Yes.
Okay.
A whole lot of them.
Yeah, I see the bullish.
Mm-hmm.
The large candle bullish.
So here's a big one right here, right?
Yeah. Mm-hmm.
This is a big one too, but this is a really big one, right?
Mm-hmm.
Okay. So I'm just going to put this little line here just so everybody can see that. Okay, y'all see that?
Yeah.
Okay, great. Does everybody agree that this is like one of the largest candles coming from the bottom of the chart?
Right.
Yes.
Okay, so now we want to find one coming from the top of the chart. Anybody see a large one coming from the top of the chart?
Over here, where is it? Near your July, and then of course you got another one. Yeah, right up in there.
But how far back should you go?
Well, you can go back as far as you want, but ideally, like for example, let's look at it like this. If I actually zoom this thing in like this, right? I can see that this whole area is roughly the same.
Right.
You guys see that? So if I pick a candle right in here, right?
Uh-huh.
That's still going to encompass all of this over here. Do you understand?
Yeah. It allows you to see your pattern, a pattern.
Correct. So let's just say, you feel like this is better over here, right? Yeah. Okay, fine. So then let's just say we like this long candle right here.
Right.
Okay. So if we like this long candle, great. We mark that long candle up. No problem. It's fine. Right? Remember, you're just looking for the zones.
Okay.
Just looking for the zones.
Yes.
Right? I mean, we could even keep going, right? I mean, it's like a never-ending thing. That's why you have to just pick where you are. That's why I say start with where price is currently, right? And work your way backwards because, depending on where you're looking at the chart could be where you have your thing. Like, even if I come back here, it should still be a demand zone all the way across.
Okay.
Right? So even if I took this large candle right here, okay, I should still be able to draw it up and it be a demand zone. Okay. So let's just deal with, we got those three. Let's just deal with those three for right now. Okay. So if we're here, I'm going to take this red thing, this yellow one away now. Okay. But what I'm going to do, remember what we're going to do at this point is I'm going to draw my what?
Your,
gonna box it up like Chinese food.
Yeah, your
I'm at least put my line right there.
Food.
I'll put my line right there first, right?
Yeah. Your demand line.
Well, my support line.
Yeah, your support. I'm sorry.
Okay, so probably right around there, right? And that's the resistance line, a resistance line. Y'all see that? Like price won't go up past that. You see that?
Okay, yeah.
It hasn't gone in the past year and a half. It hasn't gone past there. That's a decent support, a decent resistance line.
Right.
Yeah. Okay. And down here, I mean, it played around, but it's really not hit. It's not going below this support line either. Y'all see that?
Mm-hmm.
It's really not going below that either. Okay.
And now we can look for engulfing candles, man.
Yep. So, okay. So fine. Now we've got those two lines done. We see the top and the bottom. We can look for the engulfings. Got it. Okay. So let me move this out the way. All right. So we zoom in. This one's actually an engulfing, right? This one where we had the yellow line at.
Oh, okay.
Right? I just zoomed in, so it's just thicker. But that was an engulfing candle. So if I were going to do that, it's on the bottom, and if it's on the bottom, it's what type of zone?
On
Support.
Down here, what kind of zone is this?
Demand.
That's the demand.
Thank you. The demand zone, right?
Mm-hmm.
The demand zone. So really, right? Oops. Hold on.
Bowl of Chinese food.
Like this, yeah. I probably would bring this down because here's an engulfing too, really. Right? Okay. Oops. Sorry, guys.
And then you double click in there to make it long without it messing up.
Yep.
Okay.
So that, and then we'll put a negative in front of it, and we hit OK. Now, if I scroll over, I mean, this is a demand. You see this big candle right here? Boom. Yeah. Shot up out of there and went all the way up to what? The top.
That's money.
Okay. So now this could still be a demand zone too, but right here we don't see any large bullish engulfings, right? But over here we see a large candle, right? It's not engulfing, but sorry, turn that down, please. It's not engulfing, but it is a large candle. Do y'all see that? Mm-hmm. It doesn't have to be engulfing. It has to be large though.
Okay.
Okay, it doesn't have to be engulfing, but it does have to be large, right? Even right here, you see this is a large candle, but this one is engulfing, right? So if I were going to draw another zone, another demand zone, I could draw it from like here to here, right? Down to this right here, right? Right? I mean, does everybody agree that anywhere in this zone, price bounces off and goes up?
Yes, I see it.
You see that? Mm-hmm. Anywhere in there, it's bouncing off and going up. Oops, hold on. Oops. Okay. Okay, you see what I'm saying?
Yeah.
Now, we're at a point now where prices, it hasn't come back through here yet. You see that?
Mm-hmm.
It's still up here. Doesn't mean this is not a demand zone. It just means that ideally, Bobby, if price gets back down here, what would we be expecting price to do?
But the break and go, and I mean, I guess for the trend to go the opposite way.
What does that mean? If price comes back down here, what are we expecting price to do?
Well, just stop right there.
And do what?
And go up.
Correct. It could. But we also have this zone down here, don't we?
Oh, yeah.
All right. It could drop further.
It could drop further.
Wait a minute. I don't know that other line. So we got two drop zones.
Yeah. Remember we just drew this line right here.
That's the pattern. It's just showing you that's the pattern for
right. I got
so it's letting you know in that pair that, okay, right here, even though she drew her demand zone right here, it's also showing you another pattern that it can drop further.
Right, I got you.
Same thing with the top. If she drew her supply zone up there and find a supply zone, she can also show you where it can go even higher because it does go higher.
I got you.
Got it? You see what I'm saying? Mm-hmm. So for example, if Stevenson comes out and says, okay, y'all, we're expecting for UJ to drop. Right?
Mm-hmm.
Like you could come to your chart and be like, yeah, I see that. Do you understand what I'm saying?
Yeah.
You got to be able to be like, I see it or I don't see it.
Mm-hmm.
Okay. So so we got our demand. This is one demand zone, but we went back further and we identified that there was another area down here. If you are only focused right here, you never look left. You don't know that there's a demand zone below this.
Right.
So yes, the theory
always look
if it
left.
comes down, we're saying, oh yeah, this is a demand zone. Last time it came in this zone, price shot back up. But if you're unaware that there's a demand zone below, you would put in a buy right here and this thing could tank on you one more drop.
Yeah.
Why? Because market has told us it can come down here before it shoots all the way up. But you got to know that. Okay? Okay, great. So now we've got those two demand zones. Now we're going to draw our supply zones, right? Okay. So we chose, I think, this candle right here, or something like this. So now we're going to get this, and we're going to do red for supply, right? All right. Y'all see this is consolidation and right before that drop. Y'all see that?
Right. Yes, I see it.
At 3 full days, price didn't go nowhere. Y'all see that? Okay. So now all I'm going to do is just draw it out, right? Boom. Now, as I go across, do y'all see that price is still hitting that zone? Y'all see that?
Yes.
It's hitting that zone. And if it hits that zone, what is it doing?
It's dropping.
It's dropping every time it hit that zone. Do y'all see that? So if a swipe trade come out and say, okay, we getting ready to buy, if you were gonna buy, just common sense, where would you ultimately think the furthest place your take profit would be where? If you were gonna buy, where's the highest point you would, just common sense, even have a take profit?
Supply zone.
The supply zone, because you know at the supply zone, prices turns around most times. Okay, now that doesn't mean that's where your take profit is going to be. I'm just saying that also you have to understand that price bounces around in between supply and demand.
Okay.
Okay, now let me just say this. The idea for the most probable trade, because we're not done marking this up. I just want to delete this with you guys. The idea for the most probable trade is to buy in the demand zone, right? Wait for price to come in your demand zone and buy. Why? Because you're going from bottom to top versus buying and selling in the middle of the zone, right? If you're buying in the middle of the zone, it can go up or down on you.
Okay.
So if you want a high probable trade, you wait for price to do what? Hit the ceiling. And every time it hit the ceiling, what did it do? It dropped all the way back down. Did it take time? Yes. Are there opportunities to trade in here? And yes. But if you put a 0.01 in right here and never touched it from November, you would be in profit, because you know if you buy and supply, you can ride it down to demand. You guys understand?
Yes.
Okay. If you buy in demand, you can ride it up to supply at the basic level. There's still other opportunities in here, but that's why you need support resistance. You guys understand? That's why you got to find out the levels in between your two zones. Okay? So we've got supply zone and we've got demand zone. So now we got to start putting a few more daily support resistance areas in here, right? So what we're going to do, we're going to look for where price hangs out and plays around at, right? I mean, I probably will put one there. I mean, this is where your eyes become your eyes, right? This is with practice. You don't practice this, you won't get good at it. And you'll know if you're good at it when you actually start trading within your own zones and stuff is right. You understand what I'm saying? That's how you know. Okay. So that would be an area for me. I mean, I'm looking at price right in here. It keeps hitting this area, right? And I'm looking across, I'm looking left. Okay. I'm cool with a line right there. If I had to draw another line, here's a line, right? I'm cool with a line right there.
And I see another one, right? I see one right there too. Oh, you can't see what I'm doing though.
Yeah, I can't see. But you know what I'm saying? Draw it up in your own chart. You see what I'm saying? I mean, y'all see this is a big candle right here. You see that?
Yes.
This is like another demand zone within the demand zone. Y'all see?
Mm-hmm.
Why? Why is this a demand zone? Large candle.
Mm-hmm.
Large candles indicate a big Royal Caribbean boat is plowing through. Chase, Bank of America, hedge funds, they doing something now. They buying. Okay?
Mm-hmm.
Right? Now, if I keep going, if I keep looking, what happened here? Every time it hit, what did it do? Bounce up the supply, right? Came down, bounce up the supply. Came down, demand what? Bounce up the supply. At any one of these points, right, it could potentially drop all the way down. But that's more the strategy. We'll go over the strategy tomorrow or next day, okay, on how to trade it. But right now, what I need everybody to understand is how to draw it. How to see it first. You can't trade something you can't see. You shouldn't. It's your money. Why would you want to trade in the dark? Like, you want to have as much security that your money is going where you want it to go than anything, right?
Mm-hmm.
Okay. So those are a couple areas, right? I mean, even within this, we still have like this area right here would still be like a support resistance area.
So let me, never mind. I think I'm jumping ahead of myself.
Okay, what you gonna say?
Okay, like on a harmonic scanner, when they say,
nope.
I told you I was jumping ahead of myself.
Nope.
Because I know when you were saying, like, when you look for your big candles, right after you see your big candles, then, and you're seeing what type of trade you're in, then you said, what was the word? Follow the big candle, and right after you see that big candle, then you know where to jump in the trade at.
Right. For example, right?
Mm-hmm.
This is a demand zone, right?
Right.
Probably would even, hold on. A little bit of strategy I'm gonna share. Hold on. I'm not gonna do, well, I could do this one. Okay. So, okay, write this down. Okay, here's like a rule. Okay, here's like a rule. This is a when to get in rule. We're not supposed to be doing trading right this second, but Anita's asking me this question, so I'm gonna give you a rule. Okay, and a rule of thumb. Let's just say a rule of thumb. It's not 100%, but you can pretty much bet your bottom dollar on it, kind of like that. You understand what I'm saying? Okay. So when you see this big candle like this, what will happen is, so remember we said we want to follow what the banks do. So what is the bank doing right here, Anita?
They're buying.
They're buying, right? They're buying. So what we're looking for are buying opportunities now, right? That's all we're looking for. If the bank is buying, we're looking for buying opportunities. If the bank is selling, we're looking for what?
Selling opportunities.
Selling opportunities. That's it. So I'm not looking to get up here and sell and do all of that. I'm looking to find entry points where I can buy, because the big candle says that's the direction that the banks are pushing the market. I want to go behind the wave.
Okay.
Mm-hmm.
Okay. So if the bank is buying right here, then now
the next point will be there.
Well, hold on. The rule of thumb is that it's going to retrace and give you it's going to at least give you 50% back of that candle. In other words, the market's going to pull back at least 50% before it continues to go in a buy direction. So what does that mean? Okay. That means that if you open up your chart, you come here and hold on one second. Let's say you come in here and Okay. Don't look at anything in the blue. Okay.
Okay.
So let's say you open up your chart and you see this big long candle. That's that's where the market is right now. And you see that red candle coming down, right?
Okay.
Are you looking at a point that you can buy, or are you looking for a point that you can sell?
I'm looking for a point where I can buy.
Correct. And the rule of thumb is that when price comes down about 50% of that candle, you can buy. So what would that mean? That would mean if I came in and I had all this drawn up first, okay, I'm not looking at a blank chart and I see this, okay, I'm not doing that. I'm finding my supply zones, my demand zones. I'm drawing out my support and resistance. And then boom, I see this candle right here. I could very easily come in here and I could draw, like if you can't see where 50% is, you could essentially get your fibs, right? You can get your fib.
Okay.
And you can go from the bottom to the top of that candle. Okay? You can go, and I'll move this blue thing out the way so you can see. Well, no, let me keep it like this. Okay. You guys see I got the bottom of the fib at the bottom of the green candle and the top of the fib at the top of the wick, right?
Okay.
You see how, let me kind of move this a little bit over. I can move it over some more, hold on. Okay, we're focused on that green candle right there. But you can see these numbers right there. See the numbers? Okay, let me scoop this back over. All right. So now I'm going to look at where it says 50%. See that 0.5 right there?
Right. Yes.
Okay, so I'm going to come in here and I'm going to make it yellow for the sake of it. I'm going to plop a line right there on that 50% line, right?
Right.
And what I would do is I would put a buy limit right there.
Gotcha.
Because the rule of thumb is when you have a big candle like that, the market's going to pull back at least 50% before it goes back into the buy. Okay, so I don't know, but my theory tells me I see big boat coming past. I know the market is getting ready to start pushing up. So let me wait for the pullback first. How far is it going to pull back? It might pull back to 61.8, right? It might pull back to 78.6, but rule of thumb is around 50%. This is why Oren teaches, I don't care what size account you have, you enter the trade at 0.01. Why? Because it could pull down to 61.8, right? And you're in a buy. It could go down to 78.6 and you're in a buy, which means you're going to be negative for a little bit. That's okay. Nobody's tripping off the fact that you're going to be negative a little bit. You just don't want to be negative a lot. Do you understand? So you get in right here on your standard lot size with $200 in your account, and now you're on a daily chart and this thing pulls down 50 pips, right? And 50 times 10 is 500, right? If you had a standard lot, that's $10 a pip, right?
Right.
And if we're doing $10 a pip and this thing still pulls back 48 pips, you're down $480. You just blew your account. Or if you only had $500 in there, you're freaking out. You're panicking, right? But if you would follow the rules and enter the trade at 0.01, you're down $4.80, Anita. It's the same 48 pips, but can you go to sleep if you had a $500 account and you were negative $4 versus you had a $500 account and you were negative $480? Would you be up all night or would you be resting at $4.80 negative?
Sleeping.
Like a baby.
Yes.
like a baby. So you enter the trade at what lot size, guys?
Negative zero.
Girl.
I'm sorry, -1. I'm sorry.
Girl.
0.01.
0.01.
Yes.
That's what I just said. 0.01. I'm sorry. I'm seeing negative on the chart.
Okay. So now what I'm going to do is I'm going to remove these fibs, right? Because now we got our yellow line that tells us 50% line, right? And I'm going to move this blue box out the way too. So we can see where price really went, right? So price really pulled down probably the 78.6 line, right?
Mm-hmm.
Right, because look, 48 pips. That was the 78.6 on the fibs, wasn't it?
Right.
So this thing pulled down 48 pips. Okay, great. You got in right here. You're negative $4.80. Whoop-de-doo. Nobody cares, right? You're fine. Mm-hmm. And then what does the market do?
Goes into a buy.
It goes all the way into a buy, right?
And
so rule number one is at least 50% of the large candle. Okay, that's number one. Then number two, because people always say, well, okay, I'm at a 0.01. When could I put in a larger lot size if I wanted to? If I wanted to put in a 50-cent lot or a 10 or a standard lot, if I wanted to do that, if my account was big enough and I wanted to actually now get in on my real lot size, now that the market is going in the direction I want, when do I do that? Well, you do that on the retest. What's the retest? Okay, so the candle went up.
Mm-hmm.
Put in our buy limit right here.
Mm-hmm.
When price got here, it took us negative $4.80. It turned around, it came back up, and then it closed above our line. Y'all see that?
Mm-hmm.
Then price came around and touched the line once. You see that? The wick. Price turned right back around and touched the line once. That's called a retest. Everybody got that?
Yes.
If you were going to put another lot size on, you wait until the retest. So let's say that we're in real time. In real time, I come in, I open up my chart, I see this candle. Oh my goodness, it looks like bank about to do something. So I drop all my stuff and I see this is a demand zone and we're finna ride this puppy up. Why? Because I'm at the bottom of the chart.
Mm-hmm.
I'm confident of that. If not, what am I gonna do? Look left and say, oh, well, it could do this on me.
Drop. Yeah.
It could, this whole wick, it could do that, right? But what I'm gonna do is I'm gonna take my chance with the fact I see this big wick. I mean, this big candle right here. It's another demand zone. And I'm gonna come in at the lowest lot size possible. Because guess what? Even if this thing went down 100 pips, guess what? You're only out of $10. Okay?
Mm-hmm.
So I'm going to come in. I see the line right here. I see the market right there. I'm going to come in. I'm going to find 50% of this candle. I'm going to put a buy limit in at 0.01. Then I got to wait. I'm going to wait. So then another day goes past, right? Another day goes past. Now I'm down negative $4.80. Another day goes past. Now I'm up. I'm in the blue now, aren't I?
Mm-hmm.
Okay, but now I want to put in a larger lot size. I'm not going to put my real lot size in at the top of the candle, guys.
You're going to wait till it retests, like you said.
I'm going to wait till it retests. If it doesn't retest, guess what? Then your order just doesn't get activated.
Mm-hmm.
Go to another pair.
You just wait till another retest. You understand what I'm saying?
Mm-hmm.
This is why if you stick with one pair for a while, you'll start to learn what it does, what its characteristics are, how does it move on the water.
Okay.
So boom, I come up, I get in 0.01. I'm not sure if it's going to drop or whatever. So I'm at 0.01. No big deal. So then it turns around on me, it comes up, and now I said, okay, I believe this puppy's getting ready to rock and roll, but I'm gonna do what? Wait until it retests. So now I'm gonna come down here, right? This is an area, this is why you need to know support resistance. Because this is really an area of support resistance. Look at it, y'all see this?
Mm-hmm.
This is an area, it's just a yellow line because it's indicating the 50%, but it's a support line. So when this green candle closed above my support line, what we're looking for is the price to come back down and retest that line. If price does not come back and retest the line, then, oh well, wait for another opportunity. Don't chase the market. Okay, this is why one of the 4 confirmations says, is price at a support or resistance line? Didn't the days they teach that in IML Academy?
Yes.
Right? Is price at a support or resistance line? If it's not at a support resistance line, you need not be buying or selling. You need to wait. Right? So what would I do? So I have 0.01 in. It comes up, what could I do while I wait? I could put in a buy limit for my real lot size as an order and just wait. Right?
Mm-hmm.
I could wait and I'll put it in. If price never comes down there, guys, then there's nothing to worry about because it never triggered my order. Okay? But price did. Now I got a 0.01. And I have a standard. Now, guess what? Price did all this rigmarole and all this stuff that it did, right?
Mm-hmm.
So let's just say you got in right here and you got out up here, 130 pips. So on your 10 cent, you just made $13. On your standard, you just made what, Bobby?
That is, what is that, 130?
On a standard.
1,300.
1,300. 1,300.
Wow.
Okay, and what? Like you came in, you saw the trade right here, you saw the market here, so you got in, or you put your order in. So 1, 2, 3, 4, 5 days, you made $1,300. Why? Because you're looking at structure. You're not guessing. Right now, if it's not a standard, let's say you did it at $1. Okay, that's $130. That's still good. Right? You did $2. That's $260. That's still good. If you just starting out and you had a $10 account, right? You had a $10 account, you just added $13 to your $10.
So is it wise to trade on a daily time chart?
Well, we're not trading on the daily. I'm just kind of showing it to you on the daily.
Okay, got it.
When we get it, yeah.
Okay, I got you.
You see what I'm saying? I mean, because I can see it here. It's going to be the same. Right. But the reality is, like, I might want to know my exact entry point. Right, so I might put this line right here, this yellow line right here, and then I'll come down to the hourly chart.
Mm-hmm.
Look how far this is.
Oh yeah, right.
Do you see what I'm saying?
Uh-huh.
So you're gonna be waiting. Is my point.
Right.
Oh well, that's kind of far from there. Let me come back because it's not really where we saw that at. Hold on.
Hey.
Hold on. Let's do this. Daily. We went down to the hourly and we were down here. So let's put our little vertical line here on that. Okay, now let's come back to the hourly chart.
Oh man.
Okay, there we are, right?
Mm-hmm.
All right. So basically, right? Basically, what would happen is See how price was doing all of this? So we saw this big candle, right?
Mm-hmm.
Right? We saw the big candle move. And then we said, okay, when price gets here, kick me in. So now you're down on the hourly watching it to see if it's getting close. You're not looking at the daily anymore. You need the daily to draw it up. Now that I'm drawing up, I'm looking at it actively on the hour.
Okay.
Right? So now when price gets around here, right? Somewhere around in here or wherever, it kicks me in this trade. Right? And then when I got in, I went negative a little bit, right? But why did I go negative? Because my fibs showed me I can go from 50% down to 78.6, right? You got to understand that if that's your zone of moving around, your flexibility, you should be okay. You shouldn't be freaking out if you're red when you know the threshold of red that you're expecting. If I'm expecting I could be anywhere between here and here, then why would I be freaking out as long as price is in between here and here? I wouldn't get concerned until price got outside of my demand zone, until price went below here. If price got below here, this is where your stop loss is.
Okay.
Outside the zone. 3 to 5 pips outside the zone is the stop loss. Not up here. Because you scared. You scared because you over leveraging your account. Okay? So boom, price comes down to 78.6 on the fibs and it turns around. Now when it turns around and it closes above here, right? You see this?
Mm-hmm.
It closes above here, guess what? It didn't even really hit this line on next candle, did it?
Mm-mm.
So you put in a buy limit with your real lot size, didn't you? But this candle didn't hit it. So you had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All these hours is the point, okay? Until here. Then when you got here, price kicked in your real lot size. And you were negative maybe 1 hour, right? You got positive for a second. You went negative again, right? Then you went negative again, right? But price kept closing where? Above the line.
Mm-hmm.
Right? Y'all see that? It's closing above the line. There's nothing to worry about. It's closing above the line.
Mm-hmm.
If you don't have a line, guess who's freaked out? You. Right? If you don't know what's going on. So then it turns around and does what? Shoots up. Right? And I said that you could get out. Let's say you got out up here. Right? Why? Because technically this is like another area of support. Y'all see this? It's an area of support resistance. You could have got out here because usually you want to make your take profits the next area of support resistance. Right? So if I get in right here, I don't know if price is going to keep going up or not. I hope it does. But guess what? If it doesn't, are you cool with bagging 63 pips?
Get it.
Right? You see what I'm saying?
Mm-hmm.
And then if you needed to get back in the trade, you could after it did what? Retest. Right? It closed above this line and then came back down and retested, didn't it?
Mm-hmm.
Then you could get in again until when? The next level support resistance. Y'all see?
Mm-hmm.
If you don't draw support resistance, you don't know where to get in. You're chasing the trade. Human psychology is to wait and you follow this big red candle. You see another one. You see another one. Psychology says sell. Human psychology says, oh my God, the market is going down, sell. So that's where they catch all the traders right here. Everybody who has in a sale right now, they get trapped. Y'all see that? They get trapped down here and the market spins around and turns right back up. But that shouldn't be rocket science because we already know this is a support resistance line. We already know that. We already know this is 50% of the Fibonacci from here to here, don't we? We already know that. Mm-hmm. Why are we worried about it? We shouldn't be. You're worried about it because you don't know your lines and your areas of support resistance. Okay? We'll do more of that tomorrow because I don't really want us to get into all that trade and stuff, but I just want you to understand the power of why we're looking for these zones, right? Because you don't want to really trade in the middle unless you know what you're doing. The ideal scenario I would recommend is look for the supply and demand zones and wait for price to get in that zone. When price gets in that zone, know you're getting ready to buy it up from demand or you're getting ready to sell it off from supply. That's like Mayweather in the ring. Like, you almost know that's getting ready to be a win. You understand?
Mm-hmm.
Could he lose? Yeah. Is it likely? No. So you're running off of that. Right? Okay. So UJ. All right. So we drew this up. Hold on. Right? So now we've got supply demand. We've got support resistance. The last thing that we need is what?
The trend line.
Trend lines. Right? All right. So great. I can see this is going up right here. Right? So first thing I would do is I would get my little ray. And what would I do? Boom. Draw the trend line. That ain't that hard, y'all. Right? Ain't that hard, okay? Then what else would I do? I'll come over here. I get this. I see this line right here. Oops. Now, guys, you see, if I draw this like this, it's not really, I mean, it could be. It could be.
Okay, because it's hitting a lot of points, even though you were only looking for that second point.
It could be, but that's a lot of time. Like, let's say I opened up the chart and I was down here, right? Well, then.
You done trapped the market.
Oh, Anita, look at you.
I mean.
Yes. Right?
Yes.
So I wrote it down as far as it could go down, essentially, right?
Mm.
This is probably going to be more like this, actually. Right? Why am I saying that? Because here's a demand zone, and I can see that it shot up and it closed above that trend line, and it sent us into a buy. I mean, it sent us into an uptrend, right? Once it crossed over this line, once it crossed over this trend line, what happened? We went into an uptrend. It's not going down anymore. So at what point did it start going up? After this big candle came in here.
Mm-hmm.
Right? So that's probably why I wouldn't draw it way kind of horizontal like that. I would probably do it more like that, right? Mm-hmm. Because this would be the area, this would be like the ideal area to get in on the buy.
Oh, okay.
Right? So y'all see that?
Yes.
So all I want everybody to do is just practice this. Just practice this. Step 1, open the chart, pick a pair. Step 2, go to the daily chart, find your large candles going from the bottom up and from the top down. Bottom up are your demand zones. Top down are your supply zones. Okay. Box up your supply and demand zones like the Chinese takeout, right? Go back now, mark the top of the chart with your resistance line, and then mark your bottom with your support line. And now find support resistance in between. You find support resistance in between, and then you draw your trend line. Now, I don't care. I know for a fact that at this point, you see where this price is right here?
Right.
Mm-hmm. I can see the last time price where UJ is right now, the last time price was at this area, what did it do? Look left. What did it do last time it was here?
It sold.
It dropped.
Dropped, yeah.
Right? So the expectation is what about UJ right now? That everybody's looking for a large sale on UJ. Y'all see that?
Mm-hmm.
Now, ideally, overall, if UJ drops, potentially, I just want y'all to think, right? Just think and analyze, be an analysis, analyze it, be an analyst for a second. Just think. Price was up here and it drops. If it drops, it could potentially drop all the way down to where?
To your the demand zone.
It could drop all the way back down, at least to this line, right? Why? Because it came up, it retested this line one time. It can retest a second time, right? So if UJ does that, I don't know exactly when, right? I'm waiting for UJ to do it because I want to ride this trade, right? But let's just say somewhere around here it happens and it drops down to here. Guys, how many pips is that?
Oh, 622. 623 pips.
So this is why certain IML TV educators are looking out for certain pairs. Do you guys understand? Because they've had their stuff marked up and now they see a pattern happening. They're like, wait a minute. UJ was just at this point. Last time it was at this point, it hit and it dropped where? Last time it dropped down to here. So if it's
to your support.
And potentially it could drop all the way back down again. Y'all see that? If you don't mark your chart, you don't know what you're doing.
So that yellow line is your retest line, right? Isn't that what you marked that yellow line for? To retest?
No, I marked that line initially as my 50% of this large candle.
Oh, that's right. That's right. With the Fibonacci. Okay.
The retest line is always your support resistance. I mean, this line might as well just be white. I mean, the only reason why it's yellow is because I just showed you it was the 50% line. But it's still a support resistance. Retest, it always is going to retest. Look, price is going to retest the trend line. Price is going to retest the support resistance line. When you have a support line, resistance line, and trend line all together, this is why it's called confirmations. Because if I have price getting ready to break through a support line, and it's also getting ready to break through a trend line, that's greater confirmation, isn't it, Anita? Right? The more confirmations you have, the higher the probability that that's getting ready to happen.
Okay.
So if you draw up this stuff, right, you look, okay, is it a price reversal area? Yes, this is a price reversal area, right? It came down and price reversed. That's one confirmation. It could, right over here, you confirm to the left. Last time price came here, it reversed, right? So right now, was this a price reversal area? Potentially, yes. Okay, so now, all right, also, at the same time, this was a price reversal area. Price came down to this support line and did what? Bounced off. So now that price is over here, the likelihood that it's going to come down to this line and bounce off is high. So that's a second confirmation. Now, if I really get into it, you're like, okay, now it's hitting the demand zone, right? So this wick, okay, is in my demand zone. That's another confirmation. Another confirmation is this wick is also kind of bouncing off this trend line, isn't it?
Yes.
Right? So if I have all these confirmations and I say, I think I'm going to buy right here, you got to be able to ask yourself, why am I buying? I'm buying because last time price was here, it went up. It's a price reversal area. Last time price was here, it bounced off this support line. Last time price was here in the demand zone, it went up and it's bouncing off a trend line. I feel confident with my own buy. Could it do the opposite? Yes.
Yes.
But I feel confident that at least I have 3 out of 4 of my confirmations that it's going to highly, more than likely not be a buy. Not because Swipe Trade said it's a buy and you don't know what the hell you're doing. There's times when Swipe Trades might say something and I don't see it on my chart, right? If I don't see it on my chart, like I told you, my rule is I don't do it. Why? Because I'd rather not lose my money. Could I potentially win? I could.
Yeah.
But if I don't see it, I could potentially lose. Not winning, it still keeps my money in my account. But losing does not keep my money in my account, does it? So I do better sitting on my hands than I do trying to take every damn trade that comes out on the planet. You're blowing your own accounts because you're doing too much. And you don't have to. You just have to follow. This is IML Academy stuff, guys. This is Chris Derrick basically teaching in technical analysis. This is what Christopher Derrick is teaching in technical analysis. Orrin Wright teaches supply demand every single Friday. Every single Friday night, he does supply demand Fridays. There's no reason why anybody that's in IML should not be on IML TV on Friday night with supply and demand. There's no reason, none, zero. Everybody should be watching that on Friday night. Because now you don't need all those indicators. You understand what I'm saying?
Mm-hmm.
You could use them, but if you can read price, then why would you need indicators? You don't need indicators because the price is your indication. There's nothing more concrete than price. Nothing. Okay? So what I want everybody to do is I want you to practice marking up your chart. Right? Practice marking up your chart. Now I'm going to stop sharing for a second. Okay? And let's see. Taisha, you still there?
Yes, I'm here.
Okay, Taisha, what's the first thing you're going to do tonight when you open up a blank chart?
I'm going to choose a pair.
Okay, and then what you going to do?
I'm going to go to the daily chart.
Yes.
Look for the large candles coming from the top or the bottom.
Okay.
And mark up the chart on the daily chart.
Okay, but what you going to do specifically? Once you find those large candles, what you going to do?
Oh, I'm going to box them up like the Chinese.
Coach Orrin Wright, that's his phrase, right? Okay. You're going to box them up, and then what you going to do?
And then after I box them up, then I'm going to go and look for support and resistance.
Correct. And after you do that, what you going to do?
Look in between the lines, look in between support and resistance on the chart for more support and resistance.
Okay, good. And then what you going to do after that?
Draw my trend line.
There you go, Taisha. Taisha, can you do that every time you open a chart? Can you just do that?
Yes, Tracy, I can. And I thank you for this. After my year and a half of trying to learn Forex, to be honest, no lie, this has been the best experience that I've had.
Oh, yay!
Nothing has compared to what you gave us tonight.
Yay!
And I thank you.
You're
I'm
welcome.
tired of going accounts. I'm tired of going back to work.
I know, going back to work, stop at work, going back to work. We don't want you to do that. But this is learning ABCs and 1, 2, 3s that our children have to learn. You understand? This is preschool. Everybody wants Kobe money or LeBron money, but nobody wants to go to Pee Wee basketball on Saturday mornings and practice learning how to dribble. Y'all understand what's going on here? Oh, yeah. Nobody wants to get up Saturday mornings and go into a gym with a bunch of 3-year-olds and dribble the ball. Because y'all think y'all too good for that. You just want to jump right into the NBA. You don't know how to pass. You don't know how to dribble. You think because you see it and it looks simple enough that you're going to actually get on the court with Steph Curry. You're going to get on the court with Kevin Durant. You're going to get on the court with LeBron. And now you're going to play in the game with them. And you have not even shot a free throw 20 times in a row in the gym by yourself. And you wondering why you keep getting beat up on the court. You got to play Pee Wee basketball first.
Yeah.
Okay?
Fundamentals.
It's the fundamentals. You got to know how to dribble, pass, and shoot, period. Until you get good at the fundamentals, don't worry about alley-ooping. Don't worry about no-look passes. Don't worry about all the things that every other trader that's been trading 10 years, what Chris Terry see, what Luke see, what Stevenson see. What you need to be worrying about is when they call out a signal, your next step should always be to figure out, can you see what they see? That should be step number one for you. If you can't draw it up and see why they're getting in at that point or getting out at that point, you need to figure out either that or not get in the trade. Isn't that better than blindly taking swipe trades or taking signals?
Yep.
Yes.
Stop doing that, y'all. It's killing me to see people just blindly doing stuff when those are designed to be tools. So in other words, if I have my chart drawn up and my 4-year-old is, I'm ripping all around town today. It's a Saturday. Well, market's closed. It's a Friday or whatever. Oh, let's say it's a Thursday. And I'm moving all around town, but I've got my chart drawn up, right? And then boom, signal comes out and Wealthy Pip says, hey, we're going to buy at this point and we're going to take profit at this point. If I can at least come to my chart because it's already drawn up, isn't it, Taisha?
Yes.
Okay. It's already drawn up. Okay. And I go to my chart and I can say, well, Wealthy Pip said he getting in right here. And if that's not a support resistance line, or if that's not a price reversal area, or if that's not a demand zone or a supply zone, I'm like, well, why is he getting in right there? You understand what I'm saying? And I'm trying to figure out, why is he getting in right there? Now, if I got to run and I can't see why he's getting in right there, guess who's not implementing that trade? Me. But if I can see what he sees and on my own analysis, I agree with him, then now I can take that trade. And if I lose that trade, guess who I can't be mad at?
Yeah, you can't be mad at the coach.
You can't be mad because you have every opportunity to follow your own analysis. Nobody's making you take the trades. Sometimes they miss things. Sometimes they overshoot it. Sometimes they think it's doing this and it's doing that. Is it all the time? No. Is it sometimes? Yes. The question is, when is the time that they not going to get it right? You don't know. So then you need to always be in position to at least check it out for yourself and at least agree or disagree. And now you got to hold your own self to your own decision. And as you build your confidence with that, then you will wean off of the swipe trades and anything else because you'll start to be able to see these setups on your own.
And what really helps, what you allowed me to see, because I've always from the beginning, because I always look at those zigzag lines and the candles like the zigzag lines like a child's pattern. And I'm like, okay, they keep drawing a certain pattern. Like you said, always go back to the left, and then your support and resistance lines, as well as your supply and demand boxes, allow you to see a continuous pattern so you can see it in the present. And then, of course, with the trend lines that you draw up and you allow them to cross, it's like you trap a pattern and you can see it closely. It's like I said, you trap the market and see where to get in.
Exactly.
I love it. I'm so grateful for you, girl. Girl, keep doing what you're doing.
Well, I'm happy. So are there any questions about this stuff, guys? Hopefully it just kind of, made things a little bit easier. I hear Anita saying it did, Taisha, everybody else. Did it help you at least see things from a very simplistic standpoint where you're breaking up your chart so that you can see it in chunks? That's all you're trying to do.
Yep.
Mm-hmm.
Right? And an understanding of why one would buy and why one would sell. Right? If you just look, this is just one strategy. I'm not trying to teach. This is the strategy I'm using right now. I don't care about the 40,000. Hold on. So I turn that down. Him in that fire truck. Lord, help me. So I turn it down. Turn it down. I don't care about all the other strategies. You guys understand what I'm saying? Because all 70 educators have 70 different ways they do it. So you got to find the way that works the simplest for your brain to understand, right? So I'm not telling you that you need to follow Oren, but I'm saying what I just taught you is what Oren teaches.
Yes.
So if this made sense to you, then you need to follow Oren. That's what I'm saying. because he has a way of, and then when you watch it, and you can go right to IML TV tonight and watch last Friday's recording. You understand what I'm saying? You can watch it. And now when you watch the recording and you hear him talk about this stuff, it won't be nebulous to you, right? It won't be nebulous. But then if you get on every single Friday, then you'll hear it over and over. On Saturdays, what does he do? He takes all the trades that you lost and he helps you understand why you lost them. Why would you not want to get on Saturday if you lost any trades and be able to communicate with the man and tell him, I lost this trade, and he help you understand why you lost the trade? Why would you not want to perfect yourself on Saturdays? Do you see what I'm saying? Like, you got to commit. If you're going to play this game, you got to play the game. You got to learn the strategy, this is a strategy. It works good. I like it. It's simple. I don't have a whole bunch of lines going all over the place.
Yes.
I don't have RSI everywhere. I don't got stochastic. I don't got all this stuff going on. That drove me crazy. I couldn't. That's me. I couldn't see that. I can see this. So I figured, well, if I can see it, if anybody's like me, I believe I can help them see it too. Some of y'all might not be like me. You still can't see it. That's fine, but you got to find the educator that can teach it to you. And that's what you have to do. You have to go through certain educators till you find the one that resonates. And then you stick with that person. You with them like white on rice. You understand? You're on a white on rice. I'm on orange like white on rice. He opened his mouth, I'm there. On Facebook, he opened his mouth, I'm there. Why? Because that's the coach that I get it from. So I'm going to listen. If I lose a trade, you need to be on Saturday night so he can show you why you lost. Now you're getting better versus frustrated. Wouldn't you rather be better than frustrated?
Better, yeah.
Yes.
It's not, I mean, people like, oh, IML, all they talk about is recruiting and building. It's 200 hours of trading every single week. I don't understand how people even say that. 7 days a week, somebody has their mouth open and their channel live to teach us how to trade. And you got this man on Saturdays. He got kids and a wife at 8 o'clock at night, helping people fix their understanding of lost trades. Guys, that's called they care. Do you understand? So if you're paying your money, if we're paying our money, figure out what you're doing wrong as quickly as you can so you can start doing the right things more consistently. Right? Any questions on this stuff? We actually went a lot longer than I wanted to go for this little portion, but that's okay. I think y'all got it though. I think y'all got this. Any questions on this?
No questions.
Okay, thank you, Stacey. This definitely helped make my brain feel a little bit better.
Good. Look, I haven't been going through the chat. Let me just kind of go through this real fast and see. I don't know if there were any questions in here. Okay. Layman terms, who said that? Oh, Gary. Thank you, Gary. Okay. Movement of the cruise ship. Okay, Everett got it. Okay, Kanisha says completely new, but all right. Banks are buying, base economics. Okay, that was earlier. Look left, sideways movement. Everybody understand why we're looking left now. You know what you're looking for. They're just looking left for nothing. You're looking left to see if this is a same type of area that price reacted a certain way in the past that we expected to act in the present. Okay, let's see. Agree. Okay. Many thanks. Okay, great. Awesome. Shai says, now I see I've been confused. Okay, so Shai, are you now not confused? Are you still on?
Yeah, I'm here.
Are you now unconfused?
Yes, I feel better. I was watching Orange videos and I got a lot of it, but some of it I was still kind of confused when I actually go to the chart to see it myself.
Mm-hmm.
But now that you broke down the basics, I got it.
Okay, perfect. So everybody assignment tonight is pick a pair, okay? Go to the daily time frame, mark up your chart. When you hear mark up your chart, you know what that means now, don't you? When somebody say they marking up their chart, this is what's going on. You got to take the time to mark up the chart. Find supply, find demand, find support resistance, find your trend lines. Okay. Then go to another pair, do it again. Go to another pair, do it again. Go to another pair, do it again. And guess what? Now they're drawn up and you're good. They're drawn up and you're good, right?
Mm-hmm.
A swipe trade come out. You want to take a swipe trade? Go to your chart. If it's not marked up, mark up that chart before you take that trade. If you feel compelled to take that trade, I suggest you take it in your demo until you mark it up to see if you're going to confirm or not confirm whether you agree. You need to agree. This is your money. Why would you not want to agree that you're going to spend it or not or invest it? You better agree. Okay? That's the power of being your own money manager. You get to decide versus some fund telling you you're only going to get 5 and 6%. When we just saw in a couple of these little areas, you can get 600 pips on UJ potentially. Right? I mean, come on, guys. Somebody that have a large account, you can have life-changing income on that trade. One trade. That doesn't mean trade every pair. That means, okay, if you already know that's coming for UJ, you might need to keep your eye on UJ for a while. Like, just focus on UJ. It might not be no trades for UJ right now, but the minute you stop looking at UJ to go look at what everybody else is screaming about, guess what's going to happen? UJ going to drop, and you're going to miss it because you're looking at the other chart because everybody else is ranting and raving about something else. Just focus on one pair.
Question. UJ is on the Asian session?
Well, they're not that they're on the Asian session.
I mean, I'm saying as far as when they get active, when their banks and everything get active, is that usually?
Well, the US dollar is the base pair. So you've got.
Oh, so we still can do it on the Eastern Standard Time code.
That's what I want you to do. I want you to keep an eye on UJ and you start to tell me when you see movement.
Okay. Okay.
That's what I want you to do. That's what getting to know a pair is. Right?
Mm-hmm.
Now you're going to answer your own question because you're going to keep an eye on UJ and you're going to look. You're going to notice during the London session times what UJ is doing. Then you're going to look at New York session. Go back test it and see from 8 o'clock in the morning to 5 o'clock in the evening. What's UJ doing? Okay, from 5 o'clock in the evening to 2 or 3 in the morning. What's UJ doing? And I want you to come back and tell us. When does UJ really start? What session does it really make its moves? You tell me.
Okay.
Guys, that's what you need to be learning. Exactly that. Which is why you got to focus on one no more than 2 pairs until you get good enough with it, right? Then you can do 40 different pairs. But right now, you only work one job, don't you? Some of y'all might work 2 jobs, but you ain't working 12 jobs. Why are you trying to trade 12 pairs? Right? You're trying to get rich. You're trying to get rich off everything. Just the one. Just chill. Right? That's the way it's going to work. All right. So now let's do this real fast. What I'm going to do is I'm going to, of course, it's not set up all the way and it's not pretty or anything like that. But what I'm going to do is I'm going to go inside of Facebook. Hold on. I'm going to go inside of Facebook and I'm going to create this group so that we can I can get you guys the link and everybody can get into the group. Okay. And what I want you to do is as you start marking up your charts and you complete a whole markup on any particular pair, I want you to take a screenshot and I want you to start posting it inside our group. Okay, so that everybody else can kind of start seeing it and so on and so forth. And I want you guys to, just pick random pairs. Don't worry about what other pair somebody else have. I know some of you guys like the same team or accountability partner or something like that. Y'all work together. Don't matter. You got to learn how to mark up any pair. Okay. So let's see.
All right, I'm gonna have to send you a friend request first.
Oh yeah. Well, hold on. Groups. Groups. I'm going to create a group. And what y'all want to name this group? What do we want to call this group?
The Globe Traders. You know where that came from.
Let's call it I'm gonna call it traders in training, okay? That's what I'm gonna call it. Because y'all don't like to train. What's what we doing right now? Okay. Traders in training.
Wow, we sound so amateur.
What? let me come back up so I can see you. In this amateur stuff.
You right.
See what I'm saying? Like you don't want to practice. You just want to be professional. You want to be NBA.
Right.
Yes, the Globe Traders. Let's play.
This is what I'm saying, y'all. You gotta be okay.
I like
you gotta be okay with being new.
You right.
You know what I'm saying? You gotta be okay with being new. Everybody gotta start somewhere. Right now, and once we get past a few points and this and that, you know, I asked Oren if he was gonna be available to jump on. You know, his computer, he spilled some stuff on his computer, so he's sitting by Chuck right now, so he wasn't really able to. But my point is, like, I'm gonna ask him to come on in a couple sessions or something like that, right? And to help out with some stuff if he's open. So you gotta be willing to train, right? Me too. Like I am in no way saying I'm a professional trader. I'm not. I'm an amateur trader too, right? But we're traders in training. We all are, okay? And so until we just accept the fact that we are in a learning phase.
Right, the Pee Wee League.
We Pee Wee, bro. Like, right. It's okay.
Right.
We have championships too, right? Right. We have Little League World Series too.
Right, we got like plastic trophies to look forward to.
There you go. You know what I'm saying? Let's be happy where we are. You know what I'm saying? Okay, now let me come on back to my little group over here. Hold on. Okay, so we're gonna do traders in training. Let's see, we're gonna add some people. Let me see people that I know right here now. I know Tino's here. I know Lakina's here. Oh, Lakina, I don't know why I can't. Oh, you got a space in your name or something? I don't know. I can't find your name the right way. Hold on. I know Gary is here, right? Okay.
Yes,
so
there's a space between the A and the K.
Okay. Look, create.
That's my mama's fault. I'm sorry.
Okay.
Hold on. You need to be an IML educator, beginner educator. For real.
Who, me?
Yes, you. I mean, I've been trying for the longest to know.
She got some Forex videos. I mean, YouTube videos.
You just showed me a lot that I'm happy.
Hallelujah. I remember, look, you was inboxing me questions before we even started today.
I've been confused. I hate being confused.
But you know what kind of helped you is the interaction of everybody. And I think that you should have recorded this and put it on your YouTube because you had interaction, people asking questions that, you know, your YouTubers can't ask, but at least you got in a forum like this, people asking questions that they want to ask.
Yeah, you were great.
Yes,
that's what you said was people jump on the wrong sessions, and that's really it. Even though you be all in IML, we go try to get the education. If you get on the wrong session, you lost, and that's what been my little problem. I guess people been over talking me sometimes, and you just made it, you know.
Yeah,
me, I'm good.
And what's so great is she taught you how to figure out the session you need to be in. Is just monitor it. And then
session.
Yeah. Session.
Okay, here we go. Hold on. Everyone, here's the link to the Facebook group. I put it in the chat function. So, you know, it's a naked group. It ain't pretty. We just getting everybody in here at least, okay?
Okay.
And I'll go in and fix it up and do other stuff like that. But I just want to make sure right now that you guys are, okay. Getting in it. Okay, approve. Okay. So as you guys start coming in there and do that, I'll approve and things like that. And then we'll get a couple of admins to kind of help us with the group. And, you know, we'll just kind of do that, right? So tonight, guys, please, and tomorrow, please practice this. Please practice this.
Can you post that link again?
It's in the chat already. Just scroll up.
Oh, okay.
Thank you, Tracy. Give me a hug. Yes, thank you, girl. I
Okay,
love
so
you.
y'all, go ahead, get in the group.
I already did.
As you mark your charts, take screenshots, post them up there, encourage each other, right? If you have questions, use the group. I'll get this recording, and I will put this recording on YouTube, but for now I'm going to make it unlisted, okay? And then what I'll do is I'll put the link to the YouTube inside of our group, so that you guys can see it, but everybody else can't see it.
Oh, so Zoom already records this?
No, I'm recording it, darling.
Oh, you are recording it.
I need it, girl. This ain't my first rodeo, girl. We got this on the computer.
I love you again, girl. Give me another hug. Oh my gosh.
Oh, y'all so funny. Okay, so I didn't get a chance to do an overview. So if any of you guys are new and you don't even know what IML is, I'm sorry. I'll do that another time. Okay, or you can go to imlpresentation.com and review those videos. We've got our Chairman 500, Mr. David and Manitier, that does the overview. So if you want to see really what IML offers and what you pay for and what the price is, go to imlpresentation.com, watch that, and then go ahead and get back with the person that invited you here tonight and let them know, hey, listen, I'm ready to get started. Is it going to cost you some money? Yeah. But this information, you ain't going to get this for free. I can tell you right now, you can scour all over YouTube all you want to, and you're not going to find anything as thorough as what we're doing for free. Why? Because even though I just recorded it, I'm not giving it to the world for free. That's what happens, right? It's in closed communities. That's what wealth is. Wealth is enclosed in certain wealth communities. And unless you're in the community, you just, asked out. Like, I hate to put it like that, but you just are. And so we're now in a position where all of us can now have access to this information. We shouldn't take it as a game. It's not a joke, and we shouldn't give up on it very easily, because that's what they want you to do, is give up, right? Because you've never seen it. It's difficult. They've been doing it 100 years. You've been doing it 2 months and you're done, right? It's not fair that you give up that quickly. So it bothers me. I don't like it. So I'm doing what I can do to eliminate that, okay, with the basics. You guys will be able to watch the recording once I get it processed on YouTube and put it back on the group. And then we'll just use our group. And then what we'll probably do is, I don't think tomorrow we'll be able to get it, because in fact, if you got hold on, let me just do this. Let me stop the recording because we're done with the training. Hold on.